The market context today is dominated by two big central banks here in Europe, of course, the Riksbank as well. So as we look ahead to those, is there anything that unites them, or should we tackle them separately?
I think separately is definitely
Let's
the
go
answer.
separate.
Also, don't forget, there's the Nordisk Bank as well.
Yes.
So there's four big European ones that we're looking at. I think, Bank of England is the one you're likely to see the biggest surprise. There's been a lot of dovish pricing. You had inflation come in significantly lower yesterday. You also had data since the last meeting have all kind of skewed in that direction. So markets are very firmly priced for a cut at this meeting and looking for more dovish signals further out. Now, I think if anything that's likely to be disappointed, you have a board that's still pretty divided. So that means the signal will come from the vote split more than anything else, and maybe get the pound rally on that. I think particularly with the pound, you maybe need a little bit lower of a risk premium price in there now that we've had inflation peaking. It's also a positioning thing in that you had very stretched short net positioning at the end of November. Some of that likely unwound post the budget, but you still probably have a ways to go. And if you get that kind of cut excitement disappointed today, you could certainly see it move.
So you've been warning that the euro is vulnerable as well when we look at the ECB. If at the Bank of England you have, for example, Claire Lombardelli and Catherine Mann joining the doves this time, what happens to pound euro? What if they're both dovish?
Yes, then you could probably see some pound weakness, but I think the euro will likely exceed that weakness. And the idea is that the ECB, they want a very boring meeting, right? I think at the last meeting, the headline that I wrote on the back of it was market rightfully ignores ECB. Now, you might have a bit of a change in how the market interprets that because we do have economic projections. So they'll kind of want to see what those economic projections tell you about whether you'll get hikes in 2026. I don't think the projections will change materially from September. What has changed materially since September is the pricing in the market. So you've gone from expecting 15 basis points of easing to looking for the next hiking cycle. And for a central bank to hike, you either need to have policy that's too easy or you need to have a risk of inflation reaccelerating. Right now, the policy rate is within the neutral range, and the inflation forecast is likely to have headline below target through 2027. So I think, if anything, that's going to be disappointed, and that means that the euro can sell off, and it means that maybe you can start thinking back to, we're not going to get hikes from the ECB next year.
So if the ECB as a whole doesn't sound as hawkish as Isabel Schnabel, then maybe the market has a bit of a rethink. We spoke moments ago, though, to our guest who was saying that the ECB could be on hold for 2 years, Skylar, and that seems to be the majority view, actually, from economists, that we'd stay on hold for a very long time. That's a lot of conversations about whether the next move is a hike or a cut. We could be caught in that place for a long time.
Yes, absolutely. And I think it's interesting why the market started looking for hikes, right? It was one comment from ECB Schnabel, and the governing board generally hasn't shifted hawkishly, I think. And like the Fed, it's a board, right? So it's not just one person that decides. And then the other factor was you had hotter data in Australia and Canada that meant the market was looking for hikes there. And I certainly don't think there's a read-through from those economies that aren't related in a huge way to Europe to whether or not you should see higher growth in Europe.